Well, in a world of misinformation, disinformation, corruption, and vested interest, data is one of the greatest assets we have. It is, in theory, unimpeachable. It tells a story free of bias, opinion, or motive. It simply is. But in the world of economic and monetary policy, it's still king. Policymakers rely on it in its totality to make decisions that impact all of us. For the Federal Reserve, the credo has long been that policy is never on a preset course. It adapts to changing information. Now, the jobs report and its headline number has cemented itself as the statistic that stands out from the crowd, summarizing the health of the world's biggest economy at a glance. Now, it's not meant to be a magic number, but it certainly has an outsized importance in shaping sentiment and changing decision-making as well. But not all jobs are created equally. What kind of employment are we creating? What is the true rate of unemployment? Does any of this actually matter? Well, if the jobs report is just a blunt instrument guiding monetary policy, is it useless? Well, joining us now for the discussion, Yahoo Finance's Julie Hyman, Myles Udland, Seana Smith, and our very own Josh Schafer. Julie, over to you.
Thanks so much, Rochelle. We're feeling very existential here, apparently, at Yahoo Finance. Why are any of us here? Why are we even talking about the jobs report? And that's what we want to discuss. And I sort of have been thinking about this in two ways. One, is the jobs report accurate, for lack of a better word? Does it actually give us a picture of what's going on in the job market? And secondly, is it even the right number for the Fed and the market to be zeroing in on? And so to sort of take the accuracy question first, just one thing that I've been thinking about is the revision to the job report, which we get every month, right? We get the payrolls number every month. It has now beaten expectations for 14 straight months, which tells you something about the ability of economists to forecast this thing. But every month it gets revised, and the amount by which it gets revised varies pretty widely. We've seen it get revised lower as of late, but again, that's very volatile. And I was even looking back at previous years and the sort of average revisions that we see on an annual basis, which again, monthly wise are really divergent. But overall, we have seen bigger revisions in more recent years than we had seen sort of pre-pandemic. So that's just taking sort of the accuracy piece of it. But there are a lot of different components of it. Shauna, you're looking at what I think...
There are so many different components of it, and I think this report in particular is so hard to kind of figure out just in terms of how the Fed is looking at it, what it could mean for policy here going forward. You mentioned that headline number, a massive beat, once again, the 14th, like you said, in a row. But when it comes to unemployment, that did tick higher, up to 3.7%. So I was taking a look at labor force participation, more specifically what we're seeing in prime age workers. So that's the workers between 25 and 54 years of age, and that ticked higher, went from 83.3% to 83.4%. And I bring that up just because that might be one of the explanations in terms of why we did see the unemployment rate tick higher, while we did get that blowout beat on the top line number on that massive more than 300,000 jobs created last month. So certainly more people entering the workforce, but maybe they haven't found that job yet. So that's why we did see that unemployment number tick higher. But I think that this is almost a head scratcher in terms of what exactly this means for the Fed, how the Fed should even be looking at this data, because like you said, Julie, so often we've seen a number of revisions and they're pretty significant when you take a look at some of those trends. So I think there's still a lot of debate about whether or not we should see a pause, and then of course if we'll see another rate hike in July.
Well, I was going to steal your point about prime age participation, but we'll let that one lie. 83.4%, highest we've seen since 2007. Julie, you know what I'm going to say about the accuracy of it, and my question is going to be: do you have any better ideas for other data that we would gather?
In fact, actually, to that point, so last night I was at an event and I was sitting next to the head of Homebase, which is a company that provides software that basically does employee management, particularly for hourly workers. So instead of like punching a time card, you would use this software. And he said to me, he thinks that the way the government measures this is quite outdated. And I said to him, do you have it? So what are you looking at then? And he pointed out data from the likes of Indeed and ZipRecruiter as being a better way to gauge what's going on. And he said even more, look at those companies, see what they're doing with their own employees. Are they laying people off, as ZipRecruiter has been doing? So that also, I don't know if that's a better idea, but that's just a better idea that someone gave me.
So I think the reason why we care about any jobs report is ultimately because it is going to most likely determine what the Fed is most likely going to do next, and that's really all the market cares about. If you look at the market today, it is suggestive of a Fed that's likely to pause next month. I mean, look at the leaders in the market right now, regional banks, kind of the Dow has been beaten down. It's been a laggard, and the Dow is outperforming today. So that kind of tells you what investors think, and I think we all know I'm an absolutist about, like, the market is right, and then we will figure out why they're right about what they're saying. So that's kind of my view on it, and I think, looking at the labor market in general, though, and trying to make sense of this report, I mean, I don't actually think it's that complicated. I think the reason economists keep getting the jobs number wrong, they're always wrong, but the reason they're wrong on the low side is because people have been waiting for the economy to roll over for months and months and months, and today's jobs report shows it's still not happening.
Well, and the word slowdown should probably stop being used, right, as far as overall slowing down the job growth. I mean, it's the biggest number we've seen since January. You strip out January, it's the biggest number we've seen since August, right, as far as monthly growth goes. So that was something interesting just today as I was looking at different commentary. I think people are starting to change that narrative a little bit. But overall, I think a lot of people said you can take from this report what you want, right? You can make a lot out of the unemployment rate. You can make a lot out of wages coming down on a monthly rate compared to what they were last month. And you can then say, well, the Fed's getting a little bit of a win here. We're starting to see a slowdown. Or you can just look at the headline number and say, well, the economy is booming. The Fed should hike again. And it seems like a lot of people that were in that camp before today are still in. It didn't change camps. It seems like everyone's still in their camp that they were in yesterday. And that's sort of where we're sitting.
Yeah, but whether or not that's validated, I think, is the other big issue here. Because, Myles, like you're saying, that this is the jobs report is what the Fed does look at. But I actually question that, whether or not there's more emphasis on CPI now, the next inflation print that we are going to get right before that meeting, whether or not that matters more, given the fact that this report, you can take what you want from it, to Josh's point, just in terms if you want to look at that rising unemployment number or if you want to look at that massive headline beat.
Well, I think for the last 15 months, it has been true that inflation data is more important, and I think it still is more important because, we saw the move in Fed fund futures last week when when PCE number came across. That was, firmer than expected. I think 4.6% increase in core PCE over last year, so still more than double the Fed's 2% target on their preferred measure. Some Fed speak this week kind of bumped it back, and we haven't seen a huge move in market expectations for the Fed based on jobs. So yes, I think inflation became the new jobs report, but ultimately, I think that the jobs report is where you get, let's say, the simplest read on the economy's health, because inflation is measuring a specific set of inputs and what you're paying for them, but how much people work and what they make while they work is most likely to have the largest impact on the overall story for the economy.
Well, and guess what? What they're making is not going up. It's not meeting inflation, right? And it's sort of stagnating if you look at those average hourly earnings. What I think, and this is, I guess, sort of I'm channeling Myles to some degree here, is...
Look at this. Look at this.
Like, you could argue it's a lagging indicator, which most economists say it is a lagging indicator, and you can sort of quibble about what it actually tells us. But there are two data points to me that are the easiest to relate to emotionally. One is the jobs report. Do I have a job or not? Does the person who lives next to me have a job or not? And secondly, am I paying more for stuff? CPI and jobs. Emotionally, those are the ones that resonate the most with us in our everyday lives. You can talk about PMIs. You can talk about, all of these
Easy
other...
on the PMIs.
Well, but that's
how
what
much
I'm saying.
I love the PMIs.
But they don't have that same sort of intuitive, relatable understanding that jobs and CPI do. Right?
To you. No, I agree.
To me.
To my people like to talk about the unemployment rate.
No, I agree.
That people like to talk about.
Yeah, I think this is the reason why jobs matter, because you can, think about it in this framework, to use like the media example. If you're doing NBC Nightly News, can you put this in the A block? The answer is yes. You can't put PMI in you shouldn't put PMI in the show ever in any circumstance. But you can say, the labor market says X, and you don't have to know anything about the economy to understand what the market, or not the market, what the report is trying to tell you.
Yeah, exactly. And I also think we haven't even just talked about the number of job openings that are still out there. That was over 10 million, the most recent report out there. So this whole supply-demand imbalance. So people out there, even if you're surveying who has a job, who doesn't have a job, I think the overarching, question that still remains is what exactly is going to happen with that supply-demand imbalance. We still have labor shortages when you take a look at some specific sectors, construction being one of those, leisure and hospitality, where we did see some gains this past month here, but certainly we're over 300,000 jobs shy of where we were in hospitality before the pandemic.
I think overall, though, if we want to talk about data, we could talk about how many of those jobs are repeat postings or how long have they been up too, right? When we talk about over 10 million job openings, how many of those jobs are actually open and are actually looking to get filled? We're never going to have that answer, but I think that's probably the problem and part of that data too.
Yeah, I'd be more interested in having that conversation about is the JOLTS report as good as we want it to be versus is the BLS.
Have another idea. That's it.
No, because it's tabulating open jobs at the end of the month, but it's like how do you qualify what is open, what's not? And I think your home bases, your Indeeds, your ZipRecruiters would have a lot of ideas in that direction of how many listings are ghost listings, how many listings are you actively trying to fill? What's the difference between actively trying to fill a job and a job just hasn't come through because you can't find the right candidates?
Well, and I think something that we've been sort of talking about too, to your point, Seana, is what does all of this tell us about what's going to happen? And I don't know that it does, right? What kind of predictive ability does all of this have? It gives us a temperature on what's happening right now, looks backward a little bit, but if you have a job now, are you going to have a job 6 months from now? I don't know. I don't think we have the answer. I don't know what data.
I think everyone would like that crystal ball, right?
Yeah. So I think that's the thing to me, though. It's like to criticize any piece of economic data on the basis of it being backward looking. It's like literally everything's backward looking. No one can see the future. There is, you want to go into it? There's no future. If you break it down to that level.
Well, the future is AI takes all of our jobs.
There's also no past,
then we
right?
don't
all we have is now and infinite nows and all this kind of stuff. And so basically, though, the market is, and this is why I like markets, because markets are trying to guess at the future, and they give you information, if you watch them closely, about what an aggregation of investors believes the future will be. Today's reaction to the jobs report suggests investors think that in the future, the economy will kind of chart the course that is slightly better than it's been, but not so much that we need to see a material change in how the Fed thinks about rates, which means, you can, buy the Dow, I guess, or whatever. You can buy regional banks. Today you can buy regional banks and a bunch of AI names and MongoDB, whatever.
But again, that's the market telling you now what it's thinking is going to happen in the future, and its view can change on Monday or the week after that.
That's why we all have jobs. That's why this is a good job.
Goodness.
That's why this is a good job, because it's going to be different on Monday and next Thursday and 3 Thursdays after that, and we don't have to sit here and say are the Patriots going to win in week 6 next year? We don't have to wait for all that stuff. We just get
They will.
They might even have a bye. I don't even know. But it's like we don't have to wait for all that stuff.
That's true.
That's
and
my pitch.
Hopefully AI won't be able to do all of this.
Fingers crossed.
AI couldn't do this. Come on.
Rochelle, we'll leave it there for now. To be continued. Back to you.
A fantastic debate there. You have the reality of the jobs market and the existential crisis that comes with it as well. Thank you so much, Julie, Josh, Seana, and Myles, for that fantastic debate on the jobs data.